All right, let's get into this. It is Thursday, January 29, 2026. And if you've been watching the tech sector this morning, you probably feel like you're taking crazy pills. ServiceNow just dropped their Q4 2025 earnings.
And if you just, look at the raw data, it was a blowout.
A total blowout. They beat on revenue, they beat on earnings per share, and they even raised their guidance for the full year.
Yeah, by every single conventional metric, this should have been a victory lap.
But, and here's the paradox we're here to solve, the stock is tanking. It's down over 10%, trading around, what, $115?
It's that classic good news is bad news thing, but like on steroids.
Exactly. So the mission for this deep dive is pretty clear. We've got the earnings transcript, the slide deck, the CFO commentary, all of it. We need to figure out why the market is punishing a winner.
Is it just noise? Or is something bigger happening?
Right. Is the way we value enterprise software just fundamentally shifting under our feet?
I think it's even bigger than that. If you read between the lines of this call, and we really went through it, this wasn't just a financial report. It was basically a manifesto.
A manifesto for what?
For the agentic era of AI. They're trying to declare that it's officially started.
The agentic era. Sounds a little sci-fi, but okay.
Well, they're deadly serious about it. The whole conversation pivoted away from, how many seats did we sell, to CEO Bill McDermott's vision of ServiceNow as the AI control tower.
Okay, the AI control tower. I definitely want to unpack that metaphor because it's doing a lot of work for them. But before we get to the vision, we have to respect the math. Let's ground this in the actual number.
The numbers look very, very good.
Okay, so let's run through them. Subscription revenue, $3.466 billion. That's up 21% year over year.
And you have to put that in context. For a company this big to still be growing at over 20% in this economy, that's rare air.
It really is. And the deal volume, 244 deals, over $1 million in net new ACV.
Annual contract value, that's the holy grail.
Yeah.
The recurring revenue.
244 of those $1 million whales in a single quarter is just, it's huge.
And they did it while staying disciplined. Operating margin was strong at 31%.
Which is impressive when you think about how much AI compute costs these days.
Oh, it's skyrocketing. Just keeping the lights on for these models is expensive. So a 31% margin is fantastic.
And they didn't just meet their own guide. They beat the high end by 150 basis points.
1.5% above their own top-end promise. So, again.
Why the 10% drop? Why is Wall Street freaking out?
It's a concept you see a lot in tech. Price for perfection. When a stock has been on a run, like ServiceNow has, the expectation isn't just for good results, it's for, explosive acceleration.
So it's the nothing's ever good enough problem?
Pretty much. But there's a specific fear here, a real ghost in the machine for the software market.
This would be the AI is going to eat our business model fear.
That's the one, the idea of seat compression. McDermott actually called it out directly on the call.
What's the bear case there, exactly?
The negative view is simple. AI gets better, so you need fewer people. Fewer people means you buy fewer software licenses or seats.
Right. If an AI agent can solve all my IT problems, why do I need to pay for a license for a human IT worker?
That's the fear. But management's rebuttal was pretty strong. They said, look, our user count actually grew by 25%, so the humans aren't going anywhere.
But the market's always looking ahead, not at today.
Correct. So even though the CFO, Gina Mastantuono, guided for 20% growth in 2026 to over $15.5 billion, the worry seems to be about what happens after that. Where's the acceleration?
So in the AI era, 20% growth is the new boring.
In this hype cycle. Yeah, I think so. Which brings us back to that strategy shift, away from seats and toward this AI control tower.
Okay, let's talk about that. McDermott used this really specific analogy. He said AI is probabilistic, but workflows are deterministic. Can you break that down?
This is maybe the most important distinction in tech for the next few years. Probabilistic is how Gen AI works. It's guessing the next word. It's creative, amazing, but it's random. It can hallucinate.
Great for writing a song, terrifying for running payroll.
Exactly. Deterministic is rules-based. It's a process. If A happens, B must happen. It's safe. It's predictable. It's everything a corporation loves. You can't run a hospital on maybe.
So ServiceNow is pitching themselves as the guardrails.
They're the guardrails. They're saying, let all that creative, probabilistic AI chaos happen, but we'll funnel it through our deterministic workflows so it doesn't, burn your company to the ground.
That's the control tower. Got it. And the product actually doing that is Now Assist.
Right, their Gen AI tool.
Yeah.
And the numbers there are They're wild.
Net new ACV for Now Assist doubled year over year. It's over $600 million now.
600 million for a product that, didn't really exist 2 years ago? It's an incredible scale. But here's the pivot. They're not just selling licenses. They're selling assist packs.
Right, like tokens at an arcade? Is that the right way to think about it?
That's a pretty good analogy, yeah. It's consumption-based. Customers buy a pack of assists. Every time the AI generates a report or summarizes a ticket, it burns a token.
So the more you use it, the more you pay. It aligns value with cost.
And they're burning through them. There was this great example on the call, a fast food chain. They started with a normal contract, saw the value, and they expanded it 13x.
13 times.
13 times. Because they just needed more assists. It shows this shift. McDermott talked about flipping the model from 80% human work and 20% automation.
To 80% automated and 20% human oversight.
Exactly, which is a massive change. And that brings us to the big buzzword, agentic AI.
This is the next frontier, right?
Okay.
But let's define it. What's an agent versus, like, the chatbot I used last week?
A chatbot answers a question. An agent does the work. You don't just ask it a question, you give it a goal.
Like book my flight, not what flights are available.
Exactly. Book my flight, add it to my calendar, file the expense report, and set my out of office. It executes tasks across multiple systems. It has agency.
Digital hands.
Digital hands. And the scale of this, IDC is estimating 2.2 billion AI agents by 2030.
2.2 billion. That's a lot of bots running around.
And ServiceNow is betting the entire farm that those bots will live on their platform.
Which explains the recent shopping spree. This has to be part of it. They bought MoveWorks, and now they're trying to get Armis and Veza.
Right, and it looks random, but it's not. It's a three-piece puzzle for operating in this agentic world.
Okay, walk me through the pieces. First up, Armis. Why buy them?
Armis is for visibility. You can't secure what you can't see. Armis finds every single connected device on your network, not just computers.
Yeah.
We're talking IoT sensors, medical devices, factory equipment, everything.
So an AI agent needs a map of the world it can interact with.
It needs a complete map. That's Armis.
Okay, piece 2, Veza.
Veza is about identity. It answers the question, who has access to what? An AI agent needs permissions, just like a person.
You don't want the HR bot to suddenly have access to the launch codes.
Definitely not. So
Yeah.
Veza creates the digital ID badge for every bot and makes sure it only goes where it's allowed to. It enforces the rules.
Got it. Map, ID badge, and the third piece they already bought, MoveWorks.
That's the orchestration layer. MoveWorks is the front door. It's a simple conversational way that employees actually talk to all these agents and tell them what to do.
So front door, map of the building, and the access keys.
That's it. It's a complete security and management stack for an army of AI agents.
That makes a ton of sense. But it's got to be expensive, right? I
Yeah.
mean, these acquisitions aren't cheap.
No. And the CFO is upfront about it. Armis will add about 1% to revenue next year, but it will create a margin headwind, maybe 50 basis points.
And Wall Street hates margin compression.
Hates it. But McDermott's defense was basically, stop looking at the cost, look at the opportunity. He said they're not buying revenue, they're buying tech to go after a $600 billion market.
He seems very convicted. He used that great Lou Gerstner quote on the call. Something about setting your hair on fire.
Yeah, changing business processes is like setting your hair on fire and using a hammer to put it out.
It's such a great image for how hard this stuff is for big companies. It's not easy.
No, it's painful. Which is why these real-world examples they gave were so important.
The election one really stood out to me, using ServiceNow for election operations.
That's as high stakes as it gets, right? You absolutely cannot have a hallucination when you're managing poll workers or counting ballots.
No kidding. That implies an insane level of trust in the deterministic part of the platform.
Exactly. And then you have FedEx with supply chains, Siemens, Panasonic. These are huge industrial scale uses.
What was that thing about the financial institutions? Underwriting the savings.
Oh, this was fascinating. It means the ROI is so clear and predictable now that some banks are literally guaranteeing it to customers.
So they're saying, if you don't save the money we promised, we'll cover the difference.
It's basically ROI insurance. You just don't see that in software. It's a huge vote of confidence.
So let's talk about the ecosystem, the frenemies. Microsoft, OpenAI, where do they fit in? Are they competitors?
It's a harmony is the official word. There's tension for sure. But they announced an Agent 365 integration, so Microsoft's copilots can trigger ServiceNow workflows.
So they're building bridges.
They have to. And they're also model agnostic. They're integrating Anthropic's Claude, OpenAI's models. They're telling customers, Bring your own brain.
Why is that so important? Why not just partner with one?
Because, this was a really sharp point from McDermott, he believes the large language model itself, the LLM, is becoming a commodity. He said it's maybe 5 or 10% of the total value.
Wow. All this money and hype for 5% the value.
Gets his argument. He says the other 90% is the workflow and the context that surrounds the model.
Meaning the brain in a jar is useless without a body.
Exactly. The AI doesn't know your business.
Yeah.
It doesn't know your security rules or your approval chains. ServiceNow provides the body, the context, the environment for that brain to actually get work done.
It all comes back to the control tower.
It all comes back to the tower.
Okay, let's wrap this up. The bull case for ServiceNow seems to be strong organic growth, a really clear and ambitious strategy for this agentic future, and they're backing it up with cash.
A lot of cash. Yeah. A new $5 billion share buyback with $2 billion of that happening immediately. That's them yelling from the rooftops that they think their stock is cheap.
It's a huge signal, and McDermott just extended his contract to 2030. He's talking about a $1 trillion company in the making.
He's not short on confidence.
No, but
Yeah.
then there's the counterpoint, the risks. Why the stock drop?
Well, AI is expensive to run. Those gross margin headwinds are real. The CFO mentioned hyperscaler and LLM costs. Every time a customer uses Now Assist, ServiceNow has to pay AWS or Microsoft for that compute power.
And if they don't price those assist packs just right, the margins could get squeezed.
They could. And then there's just plain old execution risk. Integrating 3 major companies at once, that is a massive management challenge.
Things can get very messy very fast.
Exactly. And the market is saying, prove it. Prove you can build this control tower without the costs spiraling out of control.
So as we close out, I want to leave our listeners with one final thought. We talked about that number, 2.2 billion AI agents by 2030.
A staggering number.
And for the last year, everyone's been obsessed with one question. Who's building the smartest AI? Is it Google? Is it OpenAI? But maybe that's the wrong question for business.
Well, that's the right one.
The right question might be, who governs the AI so it doesn't break the company?
Right. Who keeps the agents from going rogue?
Who stops them from hallucinating and deleting your customer database? Who controls the budget when you have 1 billion digital employees running around?
You don't just need a smart brain. You need a police force. You need air traffic control.
And ServiceNow is betting over $15 billion that they are going to be that control tower. Whether the market believes it today or not, that's the bet.
That is the bet.
Thanks for diving in. We'll be watching those agent counts and margins very closely next quarter. Until then.